Winston here with a little bit of an update and a cheerfulness on the weekend. Well, not really, it's about the banking crisis, sorry about that. But the government isn't telling you the truth. If you look at the data, about 4,000 banks in the US have their doors open. And what you can see is that half of them, if you really look at the numbers, are essentially insolvent. Yeah, seriously, half. I'm walking past the Monaco beach club there in the background, which is a really beautiful space. All of this is actually. So what does that mean? Does that mean they're all going to go out of business? No. If you look at 2008, global financial crisis, 25 US banks went out of business, but relatively small banks. We've so far had pretty big banks go out of business, and there's a reason for that. The Fed, as I always warned since they started raising rates, was going to break something. I also warned about the Credit Suisse ones and a lot of the other ones, and everyone was always saying, nah, don't worry about it, banks don't fail, banks are safe. Well, here we are. I told you so, he says smugly. So what's happening here? What's the real reason? So there are two things. With the Silicon Valley Bank, they put all their money essentially into long-term debt. Long-term debt loses value in the short term when interest rates go up, because you can buy other debt, newer, fresher debt, that'll pay you higher interest rates, so nobody wants your old low interest rate debt. That's essentially what happens to Silicon Valley Bank. And a complete lack of risk management and just sheer idiocy on part of management. Secondly is that these small and medium banks, so I'm huffing and puffing a little, we're going up the hill to the beach, they finance most of the commercial real estate in the US. And commercial real estate is having a really tough time. Since COVID, you might have realized a lot of people figured out, I don't need an office, I can do some home. And then of course, on the retail side, just retail spending online has just gone up so much because Amazon will deliver it the next day, so why bother driving somewhere and picking it up? And the two things together mean that US real estate, especially prime real estate, is very, very, very empty, and therefore they're not getting the rents they want. And they bought and financed all of that real estate when they acquired it at essentially zero interest rate debt mortgages. So now that those mortgages are 5-6%, maybe more, well, the math doesn't quite add up, and the valuations are much lower. Let me show you one of the most spectacular bits of real estate around here. And you see that house up there? That's a really nice one, isn't it? So what does that mean? Well, it's a double whammy for local and regional banks, because not only are the assets they have on their books, as those bonds I mentioned at the beginning, worth less, but also the commercial real estate on their books is worth less. And there's a high chance that many of their customers will not be able to pay back in full or even service the commercial real estate mortgages that they've taken out. That's essentially the double whammy. And how do you fix that? Well, you lower interest rates, you print money, or you actually let the cycle play out for once and you kill off the crappy banks with bad management and feed them all to JP Morgan, which seems to be the way it's going at the moment. But it's a question of, I think, how many banks, how quickly, because the US government does not have a strong appetite for big crashes. There's an election coming up. Certain individuals are going to want to get re-elected, but it's very, very hard to do when the stock market's crashing. The stock market hasn't crashed, it's completely flat, hasn't moved in a year, which is baffling. If you think about it, we've got bank failures and the stock market is moving sideways. But why is it moving sideways? Because there's all this free money out there that the Fed printed, and it's seeking a safe haven and a return. And the safe haven it is seeking is, look at the graffiti behind me here. Some people say that's art. I disagree. This, on the other hand, this is art. Look at that. Winston's happy. And yes, my train of thought was this. How do we get out of this? So I think there is a chance, and I don't want to be too doomer and gloomer, that you wake up one morning and like not one bank is on the brink, but like 10 or 20 or 50. And at that point, the Fed has to admit, we broke this and we have to do something about it. And I don't think deposit guarantees are going to do it. I don't think you can feed them all to JP Morgan. I think at some point people will realize that that's just corruption. And At some point, therefore, they will basically pause interest rates for ages, and they might even pause money shredding. If they pause money shredding, we've got a real chance here of a rebound. If they don't, I think this year is going to be an interesting one. And Winston, what are your final thoughts on that? Winston says join our community and smash the like button and put a comment down below, and you can win stuff. I've still got Apple TVs to give away and our $720 a year newsletter, which is written by an investment banker with 20 years trading experience. He's a market maker and all that kind of thing. And yeah, watch this space. Look, it doesn't have to be, oh my God, let's panic, let's just freak out about this. There are opportunities in this. There are lots of opportunities in this. And I'm thinking about one at the moment actually in the AI space. And it's not what you are thinking, it's exactly the opposite of what you are thinking. So if you want to know what those are, I'll share them in the community. Join us.